Netflix reports strong subscriber gains, but Q2 revenue forecast disappoints. Updated Thursday, April 18, 2024. Surpassing expectations, robust subscriber growth. Netflix, NFLX, showcased robust first-quarter earnings, surpassing expectations with over 9 million new subscribers added. However, despite this positive momentum, the company's second-quarter revenue forecast fell short of analyst estimates, resulting in a more than 3% decline in after-hours trading. Exceeding projections, subscriber surge continues. The streaming giant exceeded subscriber projections by adding 9.3 million new users, significantly surpassing the anticipated 4.8 million. This follows a remarkable 13 million net additions in the fourth quarter. Notably, the company had welcomed 1.7 million paying subscribers in Q1 2023. However, in a strategic shift, Netflix announced it will cease reporting quarterly membership figures, alongside average revenue per member, ARM, starting next year. This decision underscores the evolving nature of its pricing and plans, which now encompass multiple tiers with varying price points tailored to specific countries. Revenue growth and guidance. While revenue soared to $9.37 billion, a 14.8% increase compared to the same period last year, Netflix's guidance for second-quarter revenue, at $9.49 billion, fell short of consensus estimates of $9.51 billion. The company attributed its revenue growth to various initiatives, including its crackdown on password sharing, introduction of an ad-supported tier, and recent price adjustments to certain subscription plans. Exceeding expectations, earnings per share. Despite the disappointment in revenue guidance, Netflix's earnings per share, EPS, exceeded expectations, reaching $5.28, well above the consensus estimate of $4.52 and nearly double the figure reported in the previous year. The company anticipates second-quarter EPS to stand at $4.68, ahead of consensus calls for $4.54. Strong profitability metrics. Profitability metrics also demonstrated strength, with operating margins reaching 28.1% in the first quarter, compared to 21% in the same period last year. While Netflix previously guided to full-year 2024 operating margins of 24%, it now anticipates a slight decrease to 26.6% in Q2. Exceeding expectations, free cash flow. Free cash flow surpassed expectations, totaling $2.14 billion in the quarter, exceeding consensus calls of $1.9 billion. Additionally, average revenue per member, ARM, increased by 1% year-over-year, aligning with fourth-quarter results. Analysts anticipate further growth in ARM later in the year, driven by the impact of the ad tier and price hikes. Significant uptick in ad tier memberships. Notably, Netflix witnessed a significant uptick in ad tier memberships, which surged by 65% quarter-over-quarter. The ad-supported plan now represents over 40% of all Netflix signups in markets where it is available. Despite the setback in revenue guidance, Netflix's strong subscriber gains, profitability metrics, and innovative strategies position it well for continued growth in the competitive streaming landscape. However, the company will need to navigate evolving consumer preferences and market dynamics to sustain its momentum in the quarters ahead.